Hello everyone, it's Red with RedDragonLeo.com, and today is Wednesday, January the 5th, 2011. Looks like we are continuing to go up as expected, and I think we have maybe one or two more days tops, possibly tomorrow morning, and that'd be it. That I think that we're going to go up, or if it doesn't quite make it tomorrow morning, then it should do it Friday. I can't see it holding off till Monday. We're so close. We're less than 100 points away right now from what I believe to be the top on the Dow. So this would be, approximately just under 1,300, I believe. I don't know exactly what level it's going to be on the SPX, but we're not too far away from it. So. As you can see here on the daily chart that we're looking at, this is very, very overheated on the ADX line and the positive DI line. What I think is going to happen is you're just going to see a big, huge turn on this and just sharply go straight up, and this just do the opposite and go down. And I think this is going to stay up here. And the ADX line as it stays up here. So a lot of big moves are going to come, I do believe, and it should be quick and surprise a lot of people. I mean, that's the way it's designed. So you go look at it over here. Look how quick it was. Boom, boom, and then back up, and then look at that. I mean, there was a 1,000-point drop, well over a 1,000-point drop from here all the way to here. 1,000-point drop on the Dow. So, I think we can expect the same thing over the coming weeks. It's very possible that we could go right down into the Legatus pilgrimage date, and there's two scenarios there. That we could possibly go down for a couple of weeks, similar to what we did right here. Go down for a couple of weeks, then bounce back up for a wave 2. And then take our wave 3 down right after the Legatus pilgrimage is over. So that is a very possible thing. So, so we'd go down for, well, that was actually days, but would go down to, I would say, to possibly the last week or so of this month of January, and then maybe up for a couple of weeks for the last week of January and the first week of February, and to put in like a major wave 2. I don't know if it's going to be labeled a major wave. I'm not really an Elliott wave expert on the labeling of them, but I do believe this ending right here is going to be the end of primary wave 2, which if you look at here on the monthlies, this here is the start of primary wave 2, and I believe we're getting ready to end it. Okay, and this was obviously primary wave 1 down, and we got primary wave 2 up, and we're getting ready to hit primary wave 3 down to take us into 2013, 2014, and be pretty ugly. So it should take that out. Primary wave 3 will be the ugliest wave of all. Follow the forecast go as expected, then it could be very well what Enterprise Corruption Reinhardt is indicating here on his site. He's hinting at a sell-off, and he doesn't really say, but he's basically hinting at a sell-off back to the levels of the 90s, the mid-90s, which very well could happen. Scroll on down here. I've got to find this chart by him. Aha, here it is. Okay, so he's indicating, just hinting, just by putting this up, that we would go down back to about 94, 95 area, a circle there. That's just under 4,000 on the Dow. Well, I've got a print of 2016 on the SP, on the SPY. So, that's down in this area, actually, a little bit lower. That's maybe 2,000 on the Dow. So that's pretty ugly, folks. Obviously, it's not going to happen overnight, not one day. It's going to, or 1 month, whatever. It's going to happen over several years. So it could go right down into 2013 and 14, and go from there. But if you remember when we were looking at a previous point, remember we were looking at the bearish cross right here, and as soon as you see the bearish cross, the market turns basically and went up. Well, here we got the bullish cross, which to me indicates exactly the same thing is going to happen, is that with this week or next week, you're going to see it roll over just about the same time you have the cross. It's kind of I guess, a lagging indicator. You would call it that, simply that the market had already went down here and it finally crossed, and when it finally crossed, it was too late. It went up. It's kind of strange how that happens, but I guess they're just lagging indicators. But it's kind of tells me, that along with the print that we have, tells me that we're getting very, very close. There's a lot of things indicating so. Time factors. If you go on my blog, a nice chart was put up by Serge over at ETF Corner, and it was reposted here by let's see, who was it that reposted it? Oh, Jigsaw posted it for us. And if we open this, you can find Serge's link on my blog as well, and he points out some very interesting things here with the VIX being where it's at. Just notice what's happened after the VIX goes to this level. Basically, that's where we're at today. We're right here in this green zone. We're in this green zone. So that indicates that we just have just a hair more up before this thing rolls over. Because look, exactly the same thing happened here. Basically, the VIX was down here in this green zone, right, this green line, and also in the yellow area, putting in a quadruple bottom, I guess now. And shortly after that, it had one more high, as you can see, and then it rolled over. And it's kind of the same thing here. It had, can't hardly tell it, but it looks like it had possibly one more high, and then it rolled over. And here you can see the topping candle. See that little candle right there, indicating that it had one more high, and then it rolled over. This is all telling you the same thing. You have one little push high, and then you roll over. It's a very good chart by Serge. Go to ETF Corner, ETF-corner.com. His link is on my blog in the which is where is Serge at? Just in case you can't find him, I think he's just under the regular blog part as and regular blog roll, and Serge right there, Serge, the ETF Corner. So go check him out. He's got some good stuff there. So where we're sitting at, let's see. It looks like there's plenty of money left to rally this thing tomorrow, if they choose to do so. Look at the money that they've got. January the 6th and 7th. They've got another 6 to 8 billion on both of these days. I believe that's enough to get this up another 100 points. Although January 10th and 11th, they have 7 to 9 billion on it. So, that's obviously a concern. If we don't hit the print this and top out this Thursday or Friday, then obviously it would be Monday. Or possibly Tuesday with this money. But I understand this money is not getting them as much as it used to. I mean, you can see the market stalling out. They really, really have to push this thing really hard. And they are just basically beating themselves up. I mean, buying your own debt like the government is doing is really the equivalent of cutting off your fingers and toes and eating them one by one because you're starving to death. Eventually, you're going to run out of fingers and toes. I think that's exactly what's happening with the market. And, when that happens, the crap's going to hit the fan. It's going to roll over hard. And I think we're really, really close to it within a day or two. Could very well be tomorrow. When we look at the short-term chart, on the 15-minute chart, what is this move right here? Up, sideways consolidation, bull flag. You can see, that it just easily just pop straight up and then turn tail and head back down. So that could pop straight up and hit our level that we're looking for and roll back down. You can see that it is looking like it wants to roll back up here and wants to roll back up here on the 15. It, indicates that it wants to roll up. The 60-minute chart isn't ready to roll over yet. It's looking like it's almost there, which could indicate that the morning could easily pop up and have a candle pop up, but not go very far. Within the first hour, since it's a 60-minute bar, the very first hour might pop up high in the first 10 or 15 minutes and then roll back down throughout the rest of the day and get smaller and then go into negative territory. So that this is a very pretty bull flag, just up, sideways consolidation, nice candles pattern there. Now, it doesn't have to play out in the morning. It could trade sideways a little bit and play out later in the day. So, but I do expect this bull flag to play out. So I expect it to maybe either do it right in the morning or with a gap up, or just kind of trade sideways all day tomorrow and make a really nice bull flag for Friday. Either way, I do expect this thing to pop up here and hit this upper trend line here. And I do think we're going to come shy of 1300. There's lots of reasons for that. It's psychologically 1300 is a big number, and there'll be lots of bears waiting there. So, they don't want to let them on board the train. So you have to do one of two things. You either got to tease them and by looking like you're going to hit it and fall short, or trick them by going ahead and hitting it and let them get on board and then jumping it above it another 10 points or so to take out their stops. And that would indicate, like 1310 or something like that. I don't think that's what's going to happen. I think we're going to fall short of 1300. That's what I think is going to happen. Same thing with like on the Dow, when you look at the 11,800 area, 11,900 area, that's the range we're going to get. I don't think we're going to get 12,000. There'll be too many people waiting at 12,000. So if you hit 12,000, you got to go through it. You can't just stop there. You got to go through it and take out them stops before you take her down. You can't let those bears on board, and you got to trap the bulls, and so you can't do it. So that's why I think we're going to fall shy of 1300. I may be wrong on that, but I think we're going to fall shy of it. So that would be maybe 1290, 1295, possibly. Depends on when this goes up. If it does in the morning, we're only hitting this 1280. But if it trades sideways or chops, or maybe drops back down a little, I don't think it's going to drop back down a little. I think it may trade sideways, light volume or something, if it does not pop up. But I think we're going to pop up, and we're going to end up, going up just shy of it. And so that's pretty much, all I got right now. We're just kind of waiting for this to be hit. We're on our way there. And I don't know if we're going to have a big sell-off on Friday, if we hit it Thursday, or if Friday's just going to trade sideways. We could hit the print and just stay there for a day and not really go anywhere. So that's a possibility. Doesn't that mean it's going to have to roll over at that print? Just means it's going to hit that print. That's all. So keep that in mind. So most of the time you see these big crashes on Fridays and Mondays, or even if they're not crashes, big corrections. Let's say that big down days. Whenever you see them happen, they happen on those days. So that can indicate that the move up happens on Thursday. If it happens on Thursday, then I would expect some selling this Friday. But if it happens on Friday, then I don't expect anything to happen until Monday. So, okay, I just thought I'd do a little video update. So just kind of give you an idea of what we're looking at. We're just basically looking at either continued sideways move tomorrow, or a pop higher to fulfill this bull flag. And obviously this trend line is here, but in order for this to hit the the print on the dowel, then this will probably have to pierce this and go through it. So keep that in mind. But again, does not happen tomorrow. We could trade sideways tomorrow and pop it on Friday. Okay, so keep that in mind. So that's it. That's what I'm waiting for. And good luck to everyone. See you on the blog.